All right, traders, good afternoon. This is Christian from Hertz Tribeca Trade Group, and it is Monday, August 16th, and this is your end of day market recap. Risk disclaimer in front of you. Everything that we're going through here is for information purposes only, not giving out any advice or recommendations. Everything that we're going through here is for education purposes only. If the screen is a little bit blurry, just give it a little bit more time. YouTube takes a long time to render my videos, so just give it a little bit more time. Well, pretty nice bounce back from where we were in the beginning of the day. Just to kind of recap where futures were. They were down a little bit into the open, but I would say how many days of the last 2 weeks where we've seen, this little bit of sell, regardless of like the geopolitical stuff that's going on, but we've been seeing this push lower like in the first hour on the open, and you kind of just have to like sit it out a little bit. I feel like a little bit of deja vu because I did this last week. I went through a couple days and just pointed out that the first hour of the day there's some selling pressure, and in my opinion, if you can take a couple quick targets in some things that react pretty well, because not everything pushes lower, but we're looking at the overall market. We're looking at the S&P 500 and one of the most liquid instruments out there, which is S&P futures, which is going to be responsible for a big portion of the move. So this has just been the story lots of mornings, is that push lower, and I personally thought that we weren't down low enough, off of all the headlines overnight, because that's just how the market reacts. So really nice move from about 10:45 on, just a grind higher throughout the session. And I think it's important to kind of look through some sectors. So we're going to go over some charts. As always, I've got about 10 different charts I want to go through in terms of single stocks. But let's talk about the overall market first. And actually, the first thing that I wanted to talk about is, there's so much good information on the weekend. There's so many people that put out their videos and different notes and so forth, and there is such a more than ever before. Sometimes we have a tendency to kind of talk about things that happen negatively on Twitter. As listen, I'm human, I do it all the time. I don't like half the stuff that goes on Twitter, but you have to filter through it because there's some really good stuff too. And one of the podcasts that I like to listen to is from Joe Weisenthal at Bloomberg and Tracy Alloway, who do the Odd Lots. And the one that they talked about this week, I thought was spot on for trading. This was veteran trader Brent Donnelly. I don't know Brent, but loved what he had to say and some of the points that he made about doing being a trader full time and being a professional trader. Couple things that he mentioned. It's just it's about 45 minutes long, the podcast. So I would encourage you, if you haven't listened to it, to go ahead and listen to it. But what I really liked, because he's had a long trading career, I've had a pretty long, decent career on Wall Street at this point, and I started, not to go through all my background, but I started right before the year 2000, right, in my trading career as a financial advisor, and then I was in institutional trading at Merrill Lynch for a long time, and then of course moved to Bank of America Merrill Lynch. So I've seen a lot of, I've seen a decent amount of things. And one of which is that he said, in order to be in this game for a long time, you have to be humble. I've seen cocky traders come and go both in the retail world and a lot in the institutional world. I've been on, one of the things that I used to do, even though I was a trader in the institutional world, I still went out with the salespeople all the time and entertained with clients, because you had to know your client no matter what, no matter, the days of just being a trader, back, 1980, 1990, where you could just trade, right? That changed, right? And you really had to kind of, everybody needs to have some client relationships. So, but I spent time with a number of cocky young traders, and most of them didn't make it, and you knew they weren't going to make it because of that attitude. You just cannot you cannot expect to last that long in the business to come out really cocky. You have to be kind of a humble trader, and some of the best follows on Twitter, right? Those are guys that make observations, make adjustments to their process, and that was the second thing that was mentioned too, is to be able to adapt to the market. right? And not stay, the old, scenario of, you know, I don't know, trying to fit like in a square peg, like or a round hole, trying to fit a square peg into a round hole, I think is the right expression. I see tons of traders on Twitter, right? They want to trade what happened last year in the market. They're continuing to think like, hey, I'm going to do what I did last year and it's going to work out for me. So we have a different market on our hands. So I spent some time talking about that in the TTG weekend videos as well. But it's really important to kind of adapt to what the market is giving you, right? For example, right? It's just like, so the one example is trying to trade what we had last year. We don't have the same all growth rally. And second of all, it's the same thing when you see perma bears. Sorry, perma bears, but they've been saying angry about the monetary policy, fiscal policy, and we can't control any of that. That's all out of our means. We can only control how we're trading, the risk that we're taking, and making our own decisions, right? So it's the rest of the stuff is nonsense, right? So for people to be perma anything, right? So at Tribeca Trade Group, I'm not perma anything, right? I'm not perma value. I'm not perma growth. Whatever's providing opportunities is where I'm going to be in this market. And I think the more, again, I'm not trying to tell anybody what to do, but I'm just trying to pass along some things, and that's why I do a lot of these videos at the end of the day. I spend a couple minutes talking about this stuff because this is the important stuff. We can go through charts all we want and talk about setups, but if you don't make adjustments to the market at hand, you're going to have a difficult time, right? So So that said, it's a good interview to kind of listen to that and what he thinks, and he's got a book to read too, which I'm probably going to order the book because he said it's pretty useful for new traders as well as traders that have been doing this for a long time. But here we are in the S&P, really. Besides the shakeout in the morning, we have not lost any of the trend, right? So we're still above all the moving averages. The one that I have, the highest one that I have on my screen is the 5-period exponential moving average. And notice how the price is just gliding up. And we've done this before. We've done it here. We've done it here. We've done it here. And you can go back in time. And that's why I have the 5-period moving average on my chart, because it just tells me that we're trending, right? And we're trending very strongly right now. Now, eventually, I'm actually looking for some more volatility this week, but I could be wrong. I don't like to make predictions, and I don't like to really stick my neck out too far making predictions, but it kind of looks like this is getting somewhat extended, right? You can look at the RSI and say that we're almost a 70 on the RSI, so we're getting stretched. But where are we in these previous swings that we've seen? We could be here, we could be over here. We just don't know yet. So I'm not going to try to predict it. I'm going to kind of follow along and be be observant of if things begin to change. Let's look at the Qs. The Qs, another one that, hey, could the Qs break out here? They could, right? And we're seeing things like, if you look at some of the biggest holdings, some of the biggest weights, I should say, in the Qs look very strong. Look at what Apple did today. This was our, one of the stocks that, I really kind of left the week with last week very positively and had a nice position in options in Apple. So Apple was up 1.3%, and we're out to new highs. So really worked well. And again, using my system or our system, the MarketWebs for most traders at Tribeca Trade Group who use these. But here's your break out of the range, right? And you had this little consolidation, maybe put you to sleep a little bit on Friday. But, if you got out of Apple on Friday, there was, using the MarketWebs, there was no technical sell signal, right? We actually held above and tested the top of value nicely. Notice what we did today. Well, intraday is fine. But here's the open, here's the close. So I try to, tell myself during the day that, hey, wait until the close, because this was a really big shakeout in Apple this morning. A lot of calls, calls went up in here, right? Just so that fully transparent. A lot of calls went up in here, and then a lot of calls like through the session. There was a lot of accumulation in Apple, right? So here's me. I took let's say AMD. I took a target in Apple right off the open, and then I took some targets here at the end of the day too. Right, I'm in the 155 calls. Somebody asked me, it's so funny, and sorry, I shouldn't say it like that. It's not that it's funny, but I put out a chart this weekend of Apple, and I said I'm long options. And I had a couple of people ask me, well, what options are they? And guys, if those people, they're probably not listening to this, but it really doesn't matter, right? What matters is the setup. The option is just the vehicle, right? The option is not going to make you $1 million. You need the stock to work in your direction. And obviously, if you're using options, then you need two things to go right. So it's harder, right? But you get leverage. Two things: you need the price to go in your direction, and you need to time it right too, which is very difficult. And that's why option trading is so difficult, is because you need to get two things right. In a stock position, you just need to get one thing right. You don't have to worry about the timing. You just need the stock to move in the right direction, right? Because if you go sideways and you're in an option position, you lose, right? You need to have you have time decay and everything else associated with options. But please, it doesn't matter what option, unless you're in really short-term options. And in that case, then you're doing more gambling than anything else, right? The shorter and the bigger position shorter maturity and bigger position you take, you're really just gambling, right? Because no one can time short-term movements in stocks. The best of the best can't do it, so you can't do it either. Sorry to say. Now, can you play catalysts with short-term options? Sure, but that's a different story. So, it doesn't really matter that much if you're in October options, December options, January options. You need the stock to move. There's no secret thing that's going to happen in the options. But I've gotten this question before, and people are so fixated on what the contract is. It's like you're really missing the forest for the trees, basically. So let me continue with this because I started to talk about the strength. Microsoft was another name that we talked about at the end of the week too. This also looks strong. Facebook, right? So just going through some of the components, very strong as well. We know Google has been grinding higher. It kind of looks like the S&P chart a little bit. But some of these other areas are starting to come alive a little bit, right? And who's to say Facebook, can't go back out to new highs at this point, right? Or who's to say Microsoft can't get to $300, which everybody was telling me on Twitter on Friday, which, hey, that's fine. I could see, the next extension I see is 303. That's fine. So really nice here. And then, of course, I didn't go over... Amazon had a really nice comeback after taking out this downside VPOC, but I'm not really sold on Amazon here. What I said pre-market about Amazon was, hey, if you got it in your IRA or your 401k, your long-term account, and you're looking at adding here, I don't see anything wrong with that, in my opinion. But for a trade, in my trading account, I think there's better opportunities. Right, but again, long-term account. I own, Amazon in my long-term account, in my IRA, and that's been a staple of my one of my IRA accounts for a long time, right? But that's separate from Tribeca Trade Group. I don't trade my IRA at the company. All right, so that's Amazon, which again I just thought it was interesting, so that's why I'm mentioning it. Let's shoot over to IWM really quick. Again, kind of seems to be the problem child, leaning lower again, but sideways. I'm not going to really draw any other conclusions right now because we're right smack in the middle of the value area. So I will worry about IWM either to the upside or to the downside once we break the range. Right, that's the beauty of the MarketWebs. I don't really care what happens in the middle of these value areas, especially when something is right in the middle of the value area, right? If I'm playing something, if I happen to buy the dip, then I would be a seller at the top of value. But here, I would just wait until this thing gets out of range, right? That's what the MarketWebs really help me do a lot of times, is just eliminate bad charts, right? And focus on, there are so many names that you could trade as a trader. And it's another thing. I always see traders get stuck on names. And there's so many other things. For me, IWM is, unless you're selling premium, IWM is just not a place for me to try to guess the direction in. All right, so that's that. We might as well cover bonds. I think, interesting level here in bonds, and we talked about this pre-market. Notice where we stopped at the top of value, right? And I said in the pre-market, when the bonds were up much more than this, I said I wouldn't be surprised if we actually closed back inside value. So if you're following the long bond, 30-year bonds, watch this 165 level, and we'll see. But I'm guessing chop for bonds. But again, it's a guess, and I'll wait. We didn't break above, so this has been in value, back and forth, inside value. All right, so going back to my spreadsheet over here. So what names did well today? Well, actually, for a while it was the home builders that were leading, but I guess they sold off a little bit towards the end of the day. It's healthcare. So some of the areas that we talked about last week on Friday was saying that, hey, there's some boring areas of the market that are doing really well. The utilities, the consumer staples, those are continuing. I mean, those were both up. Those both outperformed on the day. Again, given that the S&P was only up 0.25% for the day, your utilities, your consumer staples, things of that nature are continuing to move higher. So, when you look at this overall market, it pays to look at everything, right, and not just growth stocks, right? The reason why I say that is because I know that there's a bunch of traders who have pegged themselves into or backed themselves into a corner that they can only look at growth stocks. It just is what it is. There's some other interesting things going on, right? The medical devices are a little bit of growth too, so you could catch that, but there's nothing wrong with playing some of these names that. Look at AbbVie, for example, right? We talked about a big call buyer about a week and a half ago. This thing went from 115 to 118. It's money, right? I know it's not a huge amount of money, but still, if you played at options, you're going to make money on it because they don't cost as much as the growth names, right? But really nice move through the value area there in AbbVie. Moderna, which is not exactly healthcare, a little bit more aggressive than that. I like that this found resistance at 357. That this found support right where it should have at the top of value. And you got a hammer bar. Also stayed above the 20-day moving average as well. So again, closing print always most important, right? And we traded a little bit of this today. I didn't sit in this trade too long because I know how volatile and how expensive the option prices are on this. So I was in and out pretty quickly. All right, anything else that I want? I'm going to go through some single names here. But again, look at some of these areas that are getting beaten up. The clean energy stocks, which we talked about on Friday, how bad they've been reacting. So more of the same, right? And that just tells me to stay out of this group. It does not look strong at all, right? So I'll sit, watch, monitor. Another group too. We're talking about this at the end of the day, but this grow generation, right? We've seen these pot stocks just act horribly. This for a while was one of the best performing names, but it had earnings and it's been falling apart since earnings. But again, just because you have an idea in something that you might like pot stocks, who knows? Maybe you might like to smoke pot or weed. But look at this performance. This is disgusting. It's done nothing but go down for months and months and months. So I'm not going to time that. There's better opportunities. There's things that are moving up. All right. So again, just providing some examples, things that we don't talk about every day. I'm talking about a lot here because it's Monday. Biotech hasn't really looked great for a while in regard to the overall biotech. Healthcare has acted much better. The healthcare stocks, that's nothing new. That's been going on for months, right? We've seen a lot of ETF fund flows going into healthcare, but not biotech. What else? Anything else that stands out? The ARC funds, right? Growth at any cost, right? We talked about this on Friday too. Down another 2.6%. So again, it just kind of tells you something, as we talked about in the beginning of this video. It is not 2020, right? It is not growth at any cost, right? From which we saw last year, right? This has been a massive underperformer this year. Again, I'm not saying anything negative about the fund manager, but it's just a really good proxy for super high growth stocks. And this group is not doing well right now, right? Comparatively to the market, right? They're getting benchmarked to the S&P or to the Qs. So, again, it pays to be very picky and choosy right now, and to really just trade the best setups. So let me talk about one of the, part of our watch list from this weekend was, targeting names that had good earnings that were pulling back a little bit. So Dxem, right? This was a big winner for me today. Up 3%, just caught the turn beautifully, had the 20-day moving average as support, right? And that worked very well. I started with options. You'll see me do this a lot. If I like to stay in the position and I don't want that risk of a short-term option, which September is short-term options, then what I do is I switch, right? And I switch it to cash, right? So I rolled the option position into cash, and I ended up taking a target even in the stock position, because we went through all the way through value for the week, right? So this was 506. So we'll see if it can get back. If it decides to go higher, great. I've got a piece on, but that's a great place, I thought, to take a target. All right, so Dxem. What else? Let me go through. I don't like to just go through the winners, but the losers too. SI was a position that I tried, legged into on Friday. Too weak for me. I got out of it. I'll monitor this one, but I don't like how it broke inside value. I also just dumped a couple other ones too. INMD. This is a name that I'll revisit, but again, I just I think that we're getting extended here. So if I think my stop price was 106, so I gave it to the end of the day for this name to come back. It did not, so I dumped it. Right, you set your stop price for a reason, right? So I'll revisit this one because it's one of my favorite names in the medical device group. But there's other names out there. Look at TMO right now in the medical device group. So maybe I just didn't have the right one on, right? Huge performance. Same thing with Abbott. I mentioned Abbott in the trading room on Friday, and I said, hey, who thinks this thing's going to push and break higher? So maybe grabbing the trend here in Abbott may not be a bad idea. I did not trade it. I did not take it on Friday. I had a feeling, a little gut feeling, that this thing was going to break higher, and not up that much, up 1.3% for the day. All right, a couple other names. We talked about Apple, Dxem, Floor & Decor. Right, another name that not exactly a gap up on earnings, but ran into the earnings report. I just like when things fall into support like this. I think it's good risk to reward. So yeah, as you can see, I'm trading some things that look like they're breaking out of an area. Also, some areas that are pushing back into support. Right, those are two different types of trades, but two different trades that I do. Using the MarketWebs value areas. Starbucks was another name too, and again, I got what I was looking for in Starbucks. Do I think Starbucks, even though it's such a small move, I got into some short-term calls, September calls for $1.10, and I took them off for $1.40, $1.50 today. Again, to me, taking 33% on a one-day trade in this market, I think is fairly decent to do. Datadog was a name that I took off on Friday. At 134, and it kind of came in a little bit, so I added some of that stock back today. Again, just a little bit. I figured, hey, I'm going to buy more if we go a little bit lower, and didn't really get the chance to add more to that name this morning. A few other names that I thought just acted well today. This is a name that I started, put on a position last week. Tractor Supply. Nice day today, up 1.5%. No weakness really for the whole day today. Click was another name too, another semiconductor name, right? Where did this thing, right into support? and nice move here, right? So again, multiple trading opportunities, I thought, multiple good-looking setups. Just to cover a couple names that saw, I'll go do one more, and then we'll talk about a couple names that saw option activity because I know everybody likes that. But again, something that we kind of caught at the end of the day on Friday, that the REITs looked pretty strong. Look at Digital Realty. Again, S&P only up 0.25%. This name up 1.5% and breaking out. So I started a position in this one too, even though I was a little bit late, catching it. All right, so names that saw some option activity. Interesting, this Lam Research. Lam and Applied Materials have been difficult names in the semiconductors, back and forth, sideways. But I just thought it was interesting that someone was positioning in weekly calls, given that Applied Materials reports later in the week. Now, maybe somebody's looking for this name to do just that, to basically run into earnings. We'll see. Also on the option activity front, this is a kind of tough chart, but I thought that the positioning was interesting. December calls for this biotech company. Notice that this got up to, after earnings, made a nice run, stopped right at the 200-day moving average, as well as this virgin point of control, right? An area of high volume that has not been revisited before, and a low volume pullback. So I get it why someone's looking at that name. I didn't take the trade because I can't be in every trade, and also it's a biotech name, which is going to be probably a little bit more volatile, and I don't really want to be in. I don't want to have all my positions. I made this point as well in the weekend video, that not being in putting your eggs all in the same basket in terms of the type of companies, the high growth, right? We're getting participation from different areas. It's not all about high growth. So even like lower volatility equities, which I even took a target in this SPLV, right? Which is a place where I put money just to kind of put some of my cash into because I thought the trend looked pretty good. I ended up taking a target in this thing today. Really nice move and a big breakout for low volatility equities. Again, we reviewed all of those areas in Friday's video. So again, I like it when we're kind of like, really picking up on some of these trends and of course capitalizing on them. All right, guys, so that's it. I think that's long enough for Monday's video. A little bit longer than normal, but a lot of things to talk about. One other name too to kind of mention, just throwing a few names out there, is Restoration Hardware. Keep in mind, there was some DHI calls that went up this week, but keep in mind what we have this week. By the way, so I like this comeback here into top of value support, but take a look at the calendar for this week, right? It's not a surprise that they're buying. Some things. Retail sales is tomorrow, and then we get a lot of housing data. So it might be good for something like a DHI. You have to understand that earnings, option flow. It's not just because somebody knows something, right? It could just be that somebody knows that there's housing data, and they're taking a speculative position on the housing data being strong. I'm just speculating, of course, with my idea, but just kind of connecting the dots that I would imagine that somebody's buying those calls because there's a lot of housing data this week. All right, guys, thanks for watching the video. Have a great night. See you tomorrow.